Welcome guys to another video. In today's video, I'll be going over SMT divergence and how we find them in the markets and how we use them with the NASDAQ and the S&P 500. So let's get right into it. So right now I have the NASDAQ on the left hand side and I have the S&P 500 on the right hand side. So now what are SMT divergences? Well, there are differences between the NASDAQ and the S&P 500. Both indexes are very similar, but at times they do opposite things. So firstly, I'm going to be going over how we spot a bearish SMT divergence. So right now we can see price is moving higher. This is the hourly time frame, right? If we look at this high that the NASDAQ has created at 5 p.m., we can see it's created a higher high at 12. And if you look over at the S&P 500 at the exact same time, so Monday 5 p.m., we go down to Tuesday 2 p.m., we can see, well, Tuesday 12 p.m., right? Because it was 12 p.m. We can see that price didn't make a higher high. It made a lower high, right? So these are the same time frames, right? Both hourly charts, both the NASDAQ, both the S&P 500. But we have spotted a difference between both markets. What was the difference? Well, the NASDAQ was more bullish, so it took out the previous high. The S&P 500 was not bullish enough to take out that high. So what happens? We created a lower high. So what is this? This is an SMT we'll just call it SMT. Between the NASDAQ and the S&P 500. There we go. Easy, right? Higher high, lower high, right? There's the difference. So bearish SMT, what does this mean? It means that the S&P 500 is less bullish. So if you want to take sells, we would rather take them on the S&P 500 because it's the leading index to the downside. What do I mean by leading index? Well, it's already going down. It's already going down to the downside, whereas NQ is higher. So it will take more time for NQ to get to the point where ES is if you're taking sells. So ES is dragging NQ with it. So if you want to take a sell due to this SMT divergence, you'd rather take it on the S&P 500, right? However, if it was the opposite, so let's say the NASDAQ made a lower high and the S&P 500 made a higher high, the leading index to the downside is the NASDAQ, right? Because the NASDAQ is the leading index to the downside. So if you want to take a sell, take it on the NASDAQ. That's how you can spot a bearish SMT. That's how you can distinguish which one is leading to the downside and which one is trailing to the downside and which one you should be taking your trades on. Now that we've gone over a bearish SMT, let's go ahead and find a bullish SMT. What can we see here, guys, right? So if we draw our line from this low just here, which is Tuesday 18th at 12 p.m., down to this low just here, Friday at 6 a.m. in the morning on the S&P 500, and we do the same on the NASDAQ, so 18th at 12, 18th at 12, up to Friday 6 in the morning, Friday 6 in the morning. So these are the same time frames. We've drawn a line between the candles and they are the exact same time frames. One's the S&P 500, one is the NASDAQ, right? What can we see? We can see that the NASDAQ did not take out this low, whereas the S&P 500 did. This is a bullish SMT. Why? Because we created a lower low on the S&P 500 and we created a higher low on the NASDAQ, right? Which one is leading to the upside? Well, the leading index to the upside is the NASDAQ. Why? Because we have already taken out this low on the S&P 500. Therefore, if you want to take a buy, make sure you take it on the leading index, which is the NASDAQ. In this case, the trailing index is the S&P 500 because it is all the way down here. For it to get to the level that the Nasdaq is already heading to, it will take longer. It is trailing, whereas Nasdaq is already going up to the upside, right? So in a bullish SMT scenario, the Nasdaq didn't have enough bearish power, didn't have enough bearish orders to go down and sweep out this low. So therefore, we can think, okay, we don't have enough bearish pressure. Surely we're gonna start making a move back up to the upside. And what did we do? We went up, and that's how you can use a bullish SMT in this scenario. We have gone over bearish SMTs, bullish SMTs, trailing indexes, and leading indexes, and which ones you should take. I'm hoping this video made sense to you guys. That is SMTs explained very simply, and you can find SMT divergences on any time frame, on the 1 hour, the 5 minute. Obviously, higher time frame means that the SMT is stronger and more reliable, but you can find SMTs on every single time frame. Now, if you've struggled finding SMTs and figuring out which one's the leading, which one's the trailing, I'm really hoping that this video fixes that problem for you guys. And I'm hoping you can include SMT divergences inside your trading strategy or your rules, because it will definitely help you. 100% it helped me. There was a time where I had no idea what SMTs were, and it took me so long to finally figure it out. And I have realized how easy they are to spot, how easy they are to use as a confluence to trade. If you like this type of video of me going over confluences and explaining them, leave a comment down below, like, subscribe, and yeah, I'll see you guys in the next video.